everyone, welcome back to FinTech and Blockchain course. Today we will be talking about FinTech in banking. So this is an example of digital economy in Indonesia at this moment. Technically, you can do anything only using your mobile apps. You can order food from your mobile apps. You can watch movies from your mobile app. You can order taxis from your mobile app. You can pay for your expenses using mobile apps. You can also invest in so many different choices and options using your mobile apps. You can also order tickets if you want to go travel somewhere else using your mobile apps. So everything is being connected digitally. The interesting thing about digital economy is that everyone is now going digital. Facebook is going digital, YouTube is going digital, every company are going digital. But the problem is what we are going to do with those digital things. Those are the big questions that we have to think about. So the essence of financial technology is one, to improve customers' experience for those who already belong to the customer base. And secondly, to increase financial inclusion for both underserved and underbanked individuals. These are the essence of financial technology. If we look at financial inclusion more closely, then financial inclusion usually has been a top priority for governments, for regulators, and for policymakers everywhere, because we want to include everyone into the financial systems. And financial inclusion is achieved when all economic activities and segments of the society have access to formal financial services with ease and affordable costs. This is where FinTech is coming. Financial inclusion will cover everything like savings, credit facilities, insurance, payments, remittance, money transfer, financial education, and so on and so forth. So the problem with financial inclusion is not only about expanding the financial sector, but also encouraging everyone to become part of the formal financial system so that we can promote inclusive economic growth. Without including everyone into our financial system, then inclusive economic growth will not happen. When we are looking at the use of FinTech, the use of FinTech everywhere is gradually increasing, and it shows a significant increase in the last couple of years. However, we should pay attention to the fact that the increasing use of FinTech is centralized in the urban area. So in rural area or in remote area, usually the use of FinTech is quite low or probably non-existent because there was no physical infrastructure, there was no financial literacy. This is the challenge with the use of FinTech at this moment. But if we look more broadly, then the use of FinTech will face several challenges as well. If we look at the financial services and financial technology, then we have to deal with several challenges. For example, if we are looking at the financial inclusion, then we have to deal with the fact that inadequate physical infrastructure was there, especially if the country has difficult topography or geography. Like Indonesia, we have more than 17,000 islands, and building physical infrastructure in all of those islands would be impossible. And those will be one of the major constraints in expanding financial services, especially in rural areas and remote areas. Another thing that we have to deal with is insufficient financial literacy. Not many people are really aware with interest rate, with inflation, with time value of money and things like that. And those two factors will contribute to the limited use of fintech. Another challenge that we have to deal with is the rising of emerging countries. By 2030, the world's population is projected to become over 8 billion people. And 97% of this population will come from developing countries or from emerging countries. And people in all regions are predicted to live longer and have fewer children. Why? Because the younger generation nowadays are becoming more concerned toward health issues. And younger population usually have to spend most of their time at work. So they usually decide to delay marriage and to delay having children, as well as decided to have fewer children. We know that millennials are becoming the most dominant forces that will shape the way we bank. Who are the millennials? Millennials are usually university educated. They are highly educated. Um, they are sometimes graduated overseas. They are currently working as professional or entrepreneurs. Usually, they will be well paid, they will be technologically savvy, and they have global mindset. Because of their educational background and experience, they tend to be having a higher expectation. They also will be more demanding. And the thing about millennials is that they have this kind of YOLO spending habit. You only live once, so they will work hard, but they will also play hard. That's why it is important for banks and financial services, as well as fintech companies, to develop new products and services, particularly to this segment of customers. Another challenge is that increasing diversity and gender equality. Because of the global pressures toward increasing racial and ethnic diversity, as well as affirmative action to achieve equal opportunity, especially those with disabilities, then we will see increasing diversity and gender equality in workplace. In workplace, for example, there will be increasing rate of female participation. So the number of women who are actively participate in the workplace will be higher. Consequently, women will be having fewer children and they will tend to have them later in life. Another thing that we have to realize is that women usually control about 2/3 of the household budget. And this trend will continue to rise. According to PricewaterhouseCoopers in 2017, about 85% of consumer purchase was done by women. That's why it is also important for banks, for financial services, and for fintech companies to focus on women. We also have to realize that even though extreme poverty is declining, the rate of inequality is rising very rapidly. Even though over the last 30 years, extreme poverty has been cut in half, even though people who live below the higher poverty line and the poverty headcount at the lower line was reduced, we are still having significant problems. For example, millennials only have a 50% likelihood of earning more money than their parents did. The top 1% of earners captured less than 21% of total income in the late 1930s and rising to 22% today. It shows that inequality is rising very rapidly. You can easily find people who are very rich, but you can also easily find people who are very poor. Another fact that we have to deal with is the aging population and retirement. Asia currently has 9 people of working age to support each elderly person on average. But by 2050, that number will more than halve to only 4 people. Why? Because younger people tend to delay marriage. Younger people also tend to have fewer children. And this is what we call by sandwich generation problem. And because of this shortfall, it will also require greater workforce participation by women and the elderly themselves. So you will see more women participating into the workplace. You will also see older generation, like people who are above 50s or 60s even, will come back to the workplace. Their contribution will probably increase the GDP of a nation, of a country. But another problem is that we have to make more effort to maintain our living cost standards, because investing nowadays will becoming much more difficult, and to get the annual rate as we have back in 1990s or 1980s will be very, very challenging. So where are fintech? Fintech, as we know, is focusing on architectural innovation. So fintech companies creating a reconfiguration of the institutional linkage and systemic components with other providers, including incumbents able to rapidly appropriate the same or similar core technologies to refine product, services, or processes. This is what we call by architectural innovation. So most fintech companies have struggled to create new infrastructure and establish new financial services ecosystems, such as alternative payment rails or alternative capital market. But they have been much more successful in making improvements within traditional ecosystem and traditional infrastructures. Fintech companies have materially changed the basis of competition in financial services, but they have not yet materially changed the competitive landscape because they are only focusing on architectural innovation. So fintech strength relies overall on managing the customer experience in a way compared to most incumbent banks. And in doing so, they are good at combining values among themselves and other service providers and reconfiguring new ones. This is what we call by architectural innovation. And this has been done by fintech companies. So what about banks? Essentially, in the era of digital economy like today, incumbent banks have to unbundle and rebundle themselves. To remain competitive, incumbent banks should digitize its core infrastructure. There are 3 options. The first option is by replacing the core with a new technology stack. And this road is taken if banks need a quick fix in order to comply with the regulation. Second option is by modernizing the legacy platform. This can be done if incumbent banks want to retain the legacy platform but incrementally minimize the need for it as the modern architecture is built around it. So if they want to minimize risk, then this is the best option for them. The third option is by building a greenfield proposition on a new technology stack. This is an option that can be taken if incumbent banks want to launch new products and services immediately. It is considered the less expensive option and elicit the most value. In the previous session, we talked about open banking, and as we know, With open banking, nowadays banking services are currently on third-party platforms. Third-party services are also on banking platforms, and new platforms may involve different actors, different companies like data providers, infrastructure, technology vendors, insurance companies, and so on and so forth. And banks are just one of them. Because of this open banking regulation, then banks must become aware of the dynamic changes and undertake a shift to take a position in the market. Previously, bank has been criticized to be too rigid, to be too slow and difficult to adapt to new environment. But with open banking, it is suggested that we will need a new vision. Bank will become part of a broader, highly dynamic and interconnected ecosystem based on relation, platforms, and sharing of information. Thus, new business models are required. New actors are becoming more powerful in the market arena, like technology company, infrastructure, data company, and things like that. New regulations like PSD2, GDPR, and so on and so forth are also spreading, and new business paradigms not yet experienced are affecting the market deeply. In this new setting, balancing the opportunities for openness with the need for consumer protection is fundamental because we want to keep trust, we want to keep security in the market. This has been discussed in our previous session where we discussed a lot about security and privacy over this cross relationship between banks and fintech companies as well as other companies in the platform or in the ecosystem. So to conclude my presentation, technology and banking nowadays are even strongly interdependent both on technical but also on strategic dimension. Society will change its habits, and so the future of money, including the future of banking, the future of financial services, all of them will follow. Because of that, then we will need a way to reframe the way organizations see, perceive, and manage value chains, because value chains are deconstructed and the structure of an industry is transforming, and the source of competitive advantage are also altered. There will be new areas of vulnerabilities in the market because of the increasing cross-industries interconnections between banks, fintech platforms, and then startup companies, technologies companies, and so on and so forth. And more importantly, the biggest shift required will be in changing the mindset. And this is one of the most difficult things to do in this moment, because we have to change the way people see everything from the past. At the same time, we also have to keep an eye on the roots of the financial services industries. Again, like it or not, thinking differently is mandatory. So I think that's all for today. I hope these short videos will give you an introduction on fintech in banking, and I look forward to see you next time.